liquidity is the most important concept. Without liquidity, you will not be able to trade these markets with proper precision, right? If you don't understand liquidity, you would fail, because I spent years and years trading these markets, and it comes down to one concept, and it's liquidity. I have more than 10,000 hours trading these markets, and I'll try to explain everything I know within 10 minutes. It's gonna be impossible, but I'll try my best. If I don't, I'll make an in-depth video on it later maybe. Alright, what is liquidity? I'll make it simple for you guys. It's basically highs and lows, right? You probably have heard the term ERL to IRL and IRL to ERL. IRL means internal range liquidity and ERL means external range liquidity, right? ERL is highs and IRL is imbalances or Fijis, right? But I actually disagree with this. I think everything is highs or lows. This is a high, this is a low. This is imbalance, but there's a low above it or beneath it, right? We tapped in this imbalance here, but they are all highs or lows, right? Price can only reverse from a high or a low. It could be FEG, which is also high or low, like I said before, or it could be a rejection block, or there can even be SMT, which means price tapped into that high or low on another asset. There could be many reasons why price tends to react from one high or a low. Let's go a bit in depth into it, right? Let's talk about ranges. Ranges are the peak of technical analysis, right? It could be a time-based range or a price-based range, right? It could be a high that took a low, which is this, or it could be a low that took a high as well, right? Like in this example, this is a low that took a high. All these are low that takes highs, right? When we come back to this, it can either displace through these lows or turtle soup this. These are the most important lows you need, because below this is liquidity. There are people who went long in here thinking that it would keep going higher without coming back to their stop, but that's just not how price markets work, right? It would not just keep on going higher. It always needs to take these guys out, then it can go higher, right? That's how the market makers make money, right? So when price comes back to this, it can either turtle swoop this, fake breakout, or fully break out and displace through these lows. This is how you profile the market, right? Market profiling, right? Are we rejecting highs or are we rejecting lows? That's the first thing you need to know. So this is a low that took a high, right? So are we rejecting this or are we breaking through this? We are rejecting. That means we are still bullish, and this high we are breaking through this, right? So that you can see this, we are rejecting lows and breaking through highs. That means we are in a bullish trend, or we are in a bullish market right now. So the market profile right now is bullish. There's no need for me to short right now. I can short, I can counter trend short, but it's not going to be a full move. But if I long it, because I know the market profiling is bullish right now, I can make way more money, and the probability is on my side, right? That's simply market profiling, knowing which low to use, which high to use. A low that took a high, which is this. When it comes back, are we turtle swooping this or are we breaking through this, right? That's the easiest way to know whether we are bullish or bearish. If we displace through this, this acting as support, we could be bearish, right? But if we turtle swoop this, we are definitely bullish. When you identify and draw on liquidity, you need to first go to the higher time frames. It could be the monthly, the 3 months, the weekly, whatever it is, right? Let's go to the monthly and see where price is going towards, right? Price looks super bullish right now, and on the weekly, it's a 3 candle model as well. On this USD JPY, you can see that we are super bullish here, right? Because on the weekly, we turtle swoop this. This could be used as your CRT as well, and there's a 3 candle model as well on the higher time frame. So we are clearly bullish, right? We are clearly drawing towards this high on the weekly time frames. So on the weekly, we are bullish. If the weekly is bullish, I go to my lower time frames, the daily, the 4 hour, especially the daily, and I divide my days to Monday, Tuesday, Wednesday, Thursday, and Friday, right? Using weekly profiles, right? What did Monday do? Did we range on Monday? If we ranged on Monday, we can use Tuesday, and Tuesday could be low of week, and we can catch a manipulation entry here, right? And Wednesday could distribute, or Tuesday can distribute as well if we have news, right? this is weekly profiling, right? I can't explain weekly profiling in this video. Maybe on another video I'll explain. You use weekly profiling and you get an idea on what day makes the high or the low of the week, right? Once you have that, you go to daily profiling, right? Daily profiling is all about knowing which session to trade, right? It always occurs on key levels, by the way. It's always going to be key level, but the important part is not the key level, is the high or the low that you're going to choose, right? The liquidity pool that you're going to choose is the important part. Anyone can choose the key levels, right? The harder part is choosing which low or high that gets turtle swooped. What is your proper liquidity pool for price to go higher or lower? In this case, it's just higher. So now you get an idea on which day can create the low or the high of the week by using weekly profiles, right? And when it comes to liquidity, yes, breaking highs and lows, all that is important, and weekly profiles and daily profiles as well. What are daily profiles, right? Especially session profiles. What is London likely to do? What is New York likely to do, right? All this is important, right? On a classic buy day, this is what happens. Asia could be a small range, and London open or London kill zone, we see a small manipulation lower. This is for classic buy day, and it needs to tap on an hourly or a higher time frame key level, right? And creates the manipulation here. But what's more important than that is the liquidity pool here, right? There should be a liquidity pool that gets turtle swooped. We tap into this, and then price goes higher, right? When I see this, I might not enter here, but I understand daily profiles or session profiles. So I know, let's say I miss this. This is liquidity, by the way, because I know if price is going higher and I missed London, so New York, it should go lower and gives the OTE for me, right? Gives the OTE for me for price to go higher, right? So this is just session profiling, knowing what each of these sessions will do, right? But for me to take this OTE, right, I need to have a liquidity pool that will get turtle swooped, maybe this. So as soon as I see this at a key time, I know that this is the OTE for price to go higher, right? This is just knowing session profiling. There will always be SMTs at these key points, key reversal points, right? That's the crack in the correlation of these markets. And there will be SMTs, and SMTs normally occur on key levels or during different times, right? So these are the high probable SMTs. A SMT that happen from maybe this low was London and this low was New York, right? A SMT between the sessions, or SMT between just yesterday's low and today's low, right? Or last week's low. It could be anything. These different session times or time-based SMTs are the high probable SMTs, right? So as soon as you see this, you can take a long, because you know this SMT would hold, right? These are high probable SMTs, right? A small idea for us to know where the weekly candle or the daily candle goes is by using the closures of that candle, right? These are the best way to use it, but on the higher time frames, this is all right. So if we see a closure above this, we long, and if we see a wick and we close below this, we short till this low. This is a 3 candle model, right? For shorts. So the next week, the following week, we can short this. However, if we close above, we long till this high, right? So there's this one trick that I like to do on the weekly. I go on the weekly time frames and I look at what price does. We close below this, so my dog is this low. Right? So we go to this low. I want to see how this candle closes. This candle closes below, so my dog is this low. Okay, so I want to see how this candle closes. So this candle closed above this, so my doll would be this high. This is not the best way to get your doll on the lower time frames. For that, you need to know which highs and lows highs and lows are getting respected or disrespected, the low that takes the high and the high that takes the low, right? Just ranges, right? It could be a normal price range, or it could be a time-based range as well, right? It could be a 4-hour candle high or a low. It could be a session high or a low, right? It could be just a weekly high or a low, right? This is a session. This is a time-based range right here. This is the weekly low, and this is the weekly high, right? All this can be used for you to identify doll on a higher time frames, right? When you identify the doll on the higher time frames, you just go to a lower time frames and use daily profiles to know, and session profiles to know where price is likely to go, right? By using time, key time, right? Key time is the most important thing. So once you have an idea, you know if 8:30, right? What's the importance between 8:30, 9:30 and 10, right? 8:30 is where high news drivers get dropped, right? 8:30 high news drivers get dropped. On days that there is news at 8:30, you will likely to see high or low of day gets created on that day, right? But a day like today, we did not have the news on at 8:30, but it was a 9:30 high of the day. It was a 9:30 high of day. Let's just take today for an example. Today, the Asian range was just a small range. London was just rallying higher in to your key level, right? Your key level was this FEG. But what's more important than the key level is your liquidity pool, right? Which was this, right? This turtle swoop into this on a key time, right? Which is 9:30. This is the 9 AM model. As soon as we tapped into this, price goes lower the rest of the day, right? That's just using session profiles. You know, if Asia did this, London did this, so New York should do this, right? Asia was a range, London was kind of range too, so you expect 9:30 a key time, right? If there was news today at 8:30, I would expect 8:30 to create the high or low of the day, but there was no news, so I expect a 9:30 to create the high or low of the day. Sometimes it could even be 10 AM because there's news at 10 AM, right? If 9:30 manipulates, 10 AM would always distribute, right? If 9:30 distributes, 10 AM could reverse, right? That's just, there are certain ways that 8:30, 9:30 and 10 and 3 AM, there are certain ways all these key times work, right? When you see it every day and when you journal every day, you'll start seeing it very clearly. Time is, it's always time, right? You need to know which month of the year you are in, right? In December or Jan, you can't expect crazy moves, right? You expect those kind of moves on the Q3, right? Q3 of the year, quarter 3 of the year, right? That's the same thing with the monthly as well. You expect the week 2 of the month to manipulate and the week 3 and 4 to distribute, right? You don't expect the first week of the month to distribute. That's not how it works, right? And same thing with the weekly profiling as well. You don't expect Monday to, sometimes Monday could distribute as well. There are different reasons why, but normally you expect Tuesday to manipulate, then and Wednesday and Thursday, most probably Wednesday to distribute, right? Tuesday and Wednesday are the highest probability days to trade. Why? Because it's the second and the third day of the week, right? The same thing with the month, same thing with the day as well, the sessions as well, right? Asia could distribute, right? You have seen Asia distribute, but I would like for London to maybe create the high or low and then New York to distribute. That's a classic buy day, right? Once you just identify time, right, which is session profiling, open, high, low and close, all that with just a proper doll, right? It's everything is so simple, right? This is a high of day right now, but let's just say you want to do long and you long off of this turtle soup, right? You know we are going towards a specific high, right? What you need to identify what that high is, and that high was this high, right? And we were rejecting lows and breaking through highs, so I was bullish here. I could have easily longed it and closed it here, because I know there's no reason for just on a random time to create high or low of day. It's gonna get created possibly in New York, because even on London we are just slowly rallying higher. If I have to recap, it's price is always going to a specific high or a low, right? It's going from a specific high to a low. It takes all the liquidity from here and then price goes higher, and it's going towards a specific high or low. How you identify what that high or low is using market profiling on a higher time frame, and then you go to your lower time frame and you look at the economic calendar to identify which days are the best to trade, which days are likely to create high or low of day, and you look at news as well, which is the economic calendar. And once the high or low is already formed, you can even trade the low as well. Once that gets formed, you look at time, right? What the high probability times, key times, when to take your position. What time is the OTE, what time is the manipulation, what time is the distribution. When you identify all that, it gets simple, right? If 9:30 we manipulate, 10 a.m. would probably distribute. If this was 3 a.m. New York 9:30, we could go lower for the OTE, right? All that. That's just simply what it is. It's always rejecting a low or breaking a high. Alright, so to recap all this, you identify the range, right? It could be a time-based range or a price-based range, right? A high that takes a low or a low that takes a high, right? Once we turtle soup this, right, it could either displace through those or turtle soup that, right? So if we are rejecting lows and breaking into new highs, we are in bullish market conditions, right? Once you identify that, you know which high or which liquid pool we are going towards or drawing towards, right? So when you identify both of that, you use time, right? Time is the most important thing here, because you can get all this right, but if you enter the wrong time, let's say you enter here, you can get the wrong liquid right, but if you enter here, you would be in a lot of drawdown and you would easily blow your account just because you don't know the proper time, right? This time is just session profiling, open, high, low, and close, and just profiling the markets, right? You can use the economic calendar, the news events, right? Weekly profiling, right? So that you know which day will create the low of day, which month, which week of the month, which we will manipulate or we will distribute, right? You know which session we would manipulate. So once you have all that, you know when to enter as well, right? If you guys need a weekly profiling or a day in-depth weekly or a daily profiling video from me, let me know in the comments below and I'll make a video on that as well, because I literally cannot explain all this within 10 minutes. And I hope you guys enjoyed the video. That's pretty much it. If you guys have any questions, just let me know in the comments below.